Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Thursday, August 26th. Let's get started with our end of day video. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only. Not giving out any advice or recommendations. Videos for education purposes only. If the screen's a little bit blurry, it's just because YouTube takes a while to render my videos. So, obviously, big geopolitical risks, hitting the tape, and everything that I'm going to be talking about is from a market, market standpoint. Of course, I'm not going to get into all this, all the horrible things that have transpired today, and hearing about U.S. troop deaths are absolutely horrible. But so this video, of course, will be based for the market, what I do, and it's my job. So, we'll talk about some of these things, and I'll talk about, just what I've experienced in, being a trader through some of these types of events before. So first of all, let's go through the numbers. SPY was down 60 basis points. Qs were down a little bit more than that. IWM was down 1% for the day, and the microcaps were down about the same. Bonds, which I thought were kind of interesting for the day, because I generally, whenever I think something big or something significant is going on in terms of overall risk, or either event risk, or just if something big is going on, I always look at what the bond market is doing. Is it really showing us major risk off? Is it rallying hard? Or is it telling us that there's nothing major going on, and for the time being in the market, right? And we can see that it was just up 28 basis points. Now it did start lower, and we could look at. So why don't we start there? Just because I think bonds are important. This is something that I was really looking at yesterday, because we broke value for the week, right, in the long bond. Remember, when we're looking at the prices of bond futures, or the price of, let's say, TLT, right, and when that goes lower, that it's an inverse relationship, so yield is going higher. But there was a little bit of a bid here. I thought that this virgin point of control would be taken out. This was, you could see that price didn't pass through last week's value area at all, so that kind of leaves a gap, and where there was a lot of volume previously, and the market remembers that, and the market usually looks to take those things out. That did not get taken out, of course, because right around there, we heard about the attacks that were happening overseas. So bonds did move up, but not a huge move. So that's one of the takeaways, I think, from today. Other things are, if we look at the market breadth, which when we opened, by the way, market breadth, before anything had happened, or before we had heard anything that happened, market breadth was already weak to start the day. So outside of today's events, I really think some of the things that we talked about, where the market made this really nice move to the upside, and as we know, markets don't just go in a straight line up or down. So I thought that we were going to get, for the rest of the month, a little bit of digestion. Also, I've talked about this till I'm blue in the face, right? These end of the months have been difficult, right? Take, for example, the one, if you want to go back, and if you want to look at May, for example, right? May, we know what happened last week, where it's been tough that week too, the week of monthly option expiration. But we here, basically up till 5/12, we had 4 big red bars, 2 green, and then a move back, right? And and obviously where we are here, each one of these situations that we're looking at, May, if you want to look at the volatility, a little bit of volatility in June, the little volatility in July, notice that the price has resolved itself higher in each one of these occasions. So that's kind of the main picture, and it also just is a reminder that when we move up like this 4 or 5 days in a row, it's important to lock some things in if you're a shorter term trader. Again, I'm usually talking about in these videos in reference to being a a trader, not exactly, it doesn't have to be a shorter term trader, but just watching what we're doing on a day-to-day basis. If you're a longer term investor, then, a little bit of volatility here and there shouldn't really concern you that much, especially when we've just made, for 3 consecutive days, we made new highs, right? There has to be a little bit of give and take, and a little bit of digestion. So again, all in all, S&P only down 0.5%. It just kind of tells you that the market really was pretty resilient for hearing about various different attacks that happened today. I even said in my midday video today, which I sent out to members every day, I said, hey, we were only down about 20 basis points when I sent out the midday video, which was right in here. And I said, if you want to put a hedge on, like if you feel like you got caught in this, we made a move back, and I said, you could go ahead and put a hedge on if you want to. We also talked about that in the trading room yesterday, right? Because I was referring to, obviously the Jackson Hole meeting and Powell speaking tomorrow. But I said, hey, you could buy. I'll have to look it up in the trading room, but there was one particular, like just a couple dollars away in SPY puts, and I said you could buy these for like 50 cents. I said I think that's pretty good, a pretty good hedge for the rest of the week, and of course not knowing what we would have gotten today. Yeah, and so I looked this trade up here. If you want to look here, this is what I said yesterday. In the room, this was a 348 yesterday. I said, hey, the puts that expire this week, Friday, August 27th, the 447 puts, I said they cost 58 cents. I think they got up to like well over $2 today. So, you have to be willing to kind of take, and I try to frame this in terms of, because I never want anybody to like put this trade on and then get upset when they lose 58 cents if the market just continues to basically chop away. In this sense, it worked. But again, you have to be, like, whenever you're trading weeklies, you have to be comfortable with, if the trade doesn't work, you lose the 58 cents. But I thought from a risk-to-reward standpoint, like, if you were concerned about how many trades that you were holding, and again, we don't even know what's going to happen for tomorrow. But we did get some language from some of the Fed speakers that are trying to, it seems, set the tone of tapering at some point to be announced, in the near future. So I don't know if of course, nobody knows if we get that tomorrow. Everybody can speculate. Everybody can speculate based on the reaction of it too, because it may actually be a good thing. There might be a little bit of a knee-jerk reaction for a day, maybe for a couple days, but ultimately, I think it would remove uncertainty rather than the will we, won't we, which I've been referring to over the last couple weeks to maybe a little bit longer than that. But that was the trade that I thought made sense, and I actually bought a little bit of some next week puts, which worked pretty well too. When I noticed that we were only down 20 to 30 basis points, I'm like, it's kind of a layup if you want some of this. And I was able to obviously take a target here. I said earlier that I'm probably not going to take too many targets with that trade, but that was in here, and so it worked well for a hedge. So what else can I kind of tell you about today? I would say keep this in mind, and it's one of the things that I say a lot in these videos, especially when we get towards the end of the month, because if you're a regular viewer of my videos, you know that I'm not a fan of these end of months. I just think there's a lot better places to make money. Now, obviously, last week was very good. I'm sorry, the beginning of this week, the tail end of last week and the beginning of this week worked out very well in terms of making money, and I think I happily take that and try to put it in my pocket. But I just know that there's a little bit more volatility. Now, some people like the volatility, right, where they can kind of make money on both sides of the market. Really depends on what kind of a trader you are. But if you're more of a long-only trader, the first half of the months have just been much better, right? And then, it's an exercise of being disciplined, capturing some of that. Another saying that comes to mind, which you hear all the time, is a lot of traders can make money in this market, right? It's not that hard to make money in this market. What it is hard is to keep the money, right, and to not give it back, considering that volatility at the end of the month. So I try to exercise that, so far so good. A couple trades that I did the last couple days, I talked about this in the pre-market session. I just didn't have conviction. Here's the blotter from yesterday, because I didn't do an end of video yesterday because I had an appointment that I had to make. But a couple trades I was in and out of, and some worked, some didn't. ALB was a real nice trade from yesterday. I got out of some swing, like the last piece of some swings yesterday, like the Airbnb. By the way, here's a good example, and I'll put this chart on Twitter. This is a chart that I put on Twitter a couple times about where I was looking to take the trade off of. Notice how this happened. I said 162, right? And I think, yeah. So I just found it. But so here's the post that I made the other day. Right? I said, here's where I'm looking to take this trade off of. Right? So again, if you don't believe in what I talk about in these videos, virgin point of controls and how important they are, take a look at what happened. Right? So price literally great. So again, this is how I use the MarketWebs to trade. Right? I put on the trade once we break out of value, and then I look for where you could take the target. And again, that is often at a place where there was previously, a lot of volume. So that works beautifully. It doesn't always work exactly like that, but that's why I take a good chunk of the trade off. I stayed in the last portion of the trade because, these things can be overcome. They just have to have a decent amount of volume. Like this one, for example, it was overcome. Here's another example of one. Tag this to the downside and rebounded. Now notice we did go lower here. We went a little bit lower here, but here's another one. Right? Just tag this thing perfectly. So this is not by accident that these things happen. So what I normally do is take the majority of my trade off here, if it's a shorter term swing trade, and I keep the last portion on and watch. Right? And then what I did yesterday was, this was here. Where is it from yesterday? I think I stayed in this thing. Yeah, out of last, VPOC. And then, what I did was I put an alert back at 162.80 in case the price is able to get above it, right? And I never got that alert. So, in and out, and that's it. IGT was a nice little trade. I got out of this trade, following the strength in the casinos. A couple other things from today. There's a lot of snap calls, but I tried. Maybe I should know myself by now to stay out of short-term options when the market is this dicey. But there was a decent call buyer in Snap going out. I think it was October, November calls that one up, and I thought the name being down 4% was a decent buying opportunity. It may be, just not yet. It may come back. It already tested this, this level in here. Notice, by the way, and this is why I dumped this trade and why I'm not crazy about the price action, is because when this thing did rebound, it got stuffed right at the top of value. All right, now, so it may settle back down again, and it may just need a little bit more time in there. So I will return to that. DOCN. I'm in this trade for now. I was in it right in the beginning of the day. Took a target, then took the trade off when there was volatility. We'll look at it again. But for now, I'm back in. I'm back in it, and I'm down a little bit in it. So that's it. There's the snap trade, and there's me exiting it, and that's kind of it, guys. A few other things when these things happen. You could also look at the defense stocks. I looked at them. To me, there wasn't anything that was real. When you look at the whole group, right? This is the aerospace and defense ETF. It wasn't jumping out at me to buy one of these. if you go through like 4 of these stocks, I think the GD chart looks pretty good, General Dynamics. I think I like the NOC chart the best, even though it's in value. This had a nice day today, up 1.1%. I would watch, and I have an alert set on this, so I'll be a little bit late, but 370 would be the price to watch in this one. LMT is another one. Maybe this one rallies a little bit out, above the 200-day moving average. Again, it's just not really jumping out. For this thing not even to be able to get over the 200-day moving average when you've got geopolitical tensions tells me that there's just not that much interest in it. And then RTX, which used to be my favorite of the bunch, this thing's was down 1.1% for the day. So again, you just kind of see what I mean. Like I could force a trade, and I could say, okay, I'll buy either GD or maybe the NOC, but the Northrop Grumman, but they just weren't jumping off the page to me, and I'm trying to not take as many trades in here. So that's my thought on that. The last thing I'll say here, the video is about 15 minutes long, is keep in mind, even regardless of what Powell says tomorrow, which I don't know, some of these names, so a couple of takeaways from what we've seen over the last couple of weeks. There's been some really stellar earnings reports, and names that have reported earnings, like I've been trading those quite a bit over the last couple of weeks, and they have done really well. So something like this, a DXCM, right, which tried to go higher today and kind of came back in, but these names are acting very well. And I could come up with 15 other of these names, and we have a list for those names. I'm not going to at this moment, but take for example like a couple names that reported after hours today. Right, look at this Build.com. Right, and we already saw this in a round of some of these names that reported, and I've covered these names. Team actually got sold off there at the end of the day, but I'm out of this name. But again, if you're patient and if you can basically observe what some of these names are doing, remember last week when the market was getting hit, what did Team do? Right, it did not go down; it just consolidated. Right, so I think there's going to be a lot of opportunities like this. Workday had some good earnings too after the close. Right, kind of followed what Salesforce did. So I think if you could sit tight a little bit and not get overexposed while the market, today was the first day where breadth really flipped and was not good. But again, I think that's quite normal after the move that we've had the last 4 days. So if you could kind of sit back and lay low, and and I said this yesterday in the trading room. I said it's a great day, going into this end of the week before the geopolitical stuff today. I said it's a great day. Like if you want to go to the beach for the day. If you want, like, if you can't go to the beach, like, if you could, like, go for a walk, do some exercise, but just have to know in this market where your edge is and where there's really good opportunities versus where there isn't. And going into a Jackson Hole meeting where we're getting fresh information from Powell, just to me, that's not a lot of edge, right? In terms of putting on a lot of risk and hoping that he says something favorable for the market. And the way, if you're positioned correctly, if he happens to say something, like they're going to start tapering sooner than later, and the market has a knee-jerk reaction, you want to play a little bit of offense into that, not so much defense. Right? When there's volatility, you want to get into the habit of playing offense, rather than being on your heels when we get it. All right, guys, that's it for today's video. Have a great night, everybody, and stay safe. Thanks very much.